Well, thank you, Chris, for the introduction. This is Robert. I'm here with Adrian. Adrian, can I get you to say hello?
Hello, everyone.
Great. Together we're going to have a conversation about the legal issues that are involved in the preparation of reserve studies. As Chris indicated, we had over 400 questions and comments from our webinar in May, and rather than try to address them individually, we felt it was appropriate to have this follow-up session in order to answer these questions to a large audience. But I'm sure some of you have come with specific questions, and we want to make sure this time is valuable for you. So on your screen, you'll see a dialog box. It will look something like this. If you've come with a question, or if any time a question comes to mind during our session today, please type it into the dialog box. Chris is going to be monitoring that while Adrian and I are having our conversation. We'll try to answer as many as we can in the time available after we've finished our prepared content. Now, in addition, you'll see a little hands raised icon that allows you to respond to a question we might ask. You've already started a little bit by answering the polls, but let's start off with some more audience participation. Everyone grab your mouse and let's all click the hands raised icon. Do that to show me that you're with me so far. Let's get some hands raised from everyone. Oh wow, Chris. We've got everyone's participating. Fantastic. Okay, I'm going to put hands down and we'll start our session here with a question to Adrian. Adrian, does the Board of Directors of the association have the legal right and responsibility to decide for themselves on the reserve funding plan?
Yes, they do. There's some in the industry who would like to say that it's a reserve specialist that makes that determination. Actually, that responsibility lies with the Board of Directors. Now, the reserve specialist will prepare the plan, make recommendations, but it's the board's duty to make the final decisions. And this is going to be true across the board for all states. Despite any statutes, there's going to be a general duty for all boards to oversee the common areas of the association, the repairs of those common areas, the funding of those repairs, and the long-term funding of repairs. So it's the board that has that duty as opposed to anyone else. And in California, there are a specific statute, as there are in many other states, that then specifically assign to boards of directors the duties to make appropriate disclosures, to disclose if there are going to be any deficiencies in the reserves, if the board plans to defer any repairs, and if there are going to be any special assessments. And even though that may be by statute in specific states, generally that's a duty that boards are going to need to follow anyway for all states, so that the members have an idea of what's going on with their reserves.
Well, you talk about, Adrian, the boards being responsible to make the decision. Are they required to present the reserve study, the reserve plan, to the homeowners for approval?
No. I know that there are a lot of homeowners who would like that to be a part of the democratic process, but this is not a democracy when it comes to these kinds of things. There are elected representatives, just like we have in our state and federal structure, and that those elected representatives is the Board of Directors. And there's a good reason for that. The homeowners they have no fiduciary duties to the membership as a whole, and as a result, individual owners, they're going to act in their own best interest, and they tend to focus short term, which means that if there needs to be a special assessment to deal with something, they're going to typically want to vote no, or a dues increase to fund reserves. They're not going to want to do that. But boards of directors, because of their elected positions, they're now in a fiduciary relationship with the membership, and they're required to look long term. And they're also privy to things that maybe the membership is not focusing on. Because they're on the board, they can look at the maintenance needs of the development, safety concerns, litigation, threatened litigation, over maintenance, deferred maintenance issues, insurance issues. Those kinds of things are all factored into the board's decision-making process. So this is something that does not go to the membership for a vote. This is something that the boards are required to take care of, and they're the ones that vote on these issues.
Well, let me follow up with that. You say the board's required to take care of this. What are those requirements? What are their legal obligations or requirements to execute their job well?
Well, in addition to the fiduciary duties which I mentioned, which puts them in a higher level of trust with the membership, there's what's called the business judgment rule. And what it requires is that boards make their decisions in good faith. And then the second point is that it be done in the best interests of the corporation, or in this case, the association. And the third is that they're to make that decision with such care, including a reasonable inquiry as an ordinarily prudent person in a like position would do in similar circumstances. So if there's some kind of failure that occurs, this is what the courts are going to be looking at. Did the boards behave in good faith? Did they make decisions in the best interest of the corporation? And did they, something that an ordinarily prudent person would do? So boards are under this kind of obligation when they make these decisions, whereas again, homeowners are not.
Well, Adrian, let me jump in here. This is business judgment rule. Sounds like a real good fundamental building block of how a board should make decisions. I want to step out of our webinar here and just take everyone to a great resource. You've got as Chris mentioned, the davissterling.com website, and as a resource, because we're not going to be able to answer everyone's questions today, I just want to point out this resource for people to use as a follow-up. So davissterling.com, and just to give an example, you can go to B for business judgment rule, find it, select it, and here it is right here, and now it's showing on my screen. Just a great resource. So as Adrian indicated here, there's this three-part test of or how a board member should act, and so many great follow-up things like this are on the davissterling.com website. So it's a great follow-up resource. Okay, I'm back. All right, got it.
Okay, and I know in the last webinar that we had in May, there was a lot of good follow-up questions, and one of them was really interesting, and that deals with something that I run into a lot, and I'm sure you do as well, and that is, according to the questioner, their accountant said that painting is not a capital reserve expense, and they were asking, is there something that you could provide them that shows that it is a proper reserve item?
Well, Adrian, that brings up a good point. To an accountant preparing a document for the IRS, painting is not a capital expense, but we are in the business of doing reserve studies, not preparing documents for the IRS. We are preparing reserve studies, and there's a national standard 4-part test to define which components at an association are appropriate for designating for reserves. And it's that the component needs to be a common area maintenance responsibility, needs to be life limited, needs to have a predictable remaining useful life, and it needs to have a significant expense, meaning above a minimum threshold. And that minimum threshold is often the manager's signature authority, or somewhere in the range of 0.5% to 1% of the annual budget. So the lesson or the answer is that a person or an association will prepare the reserve study for reserve study purposes, according to National Reserve Study standards, and then they prepare their taxes according to IRS standards. The documents have very different purposes. Now let me, like I did a moment ago, show a resource for our attendees here today. You go from the Davis Sterling site to Association Reserves, and if you click on the Learning Center, you'll get to this page where you can see a library of answers, and National Reserve Study standards. So if anyone's interested in finding out more information or getting additional oh, wow, I've lost my ability to speak. Able to look directly at National Reserve Study standards, that's great. I still have a lot of time to go here, so I'll let you talk, Adrian. So that's the win for you on that. Well, go ahead.
Yeah, and your website is a great resource on reserve items. And also, I want to fill in and basically say the same thing that you said, and that is, on a CPA, because I get these questions as well from CPAs, and typically it means that the CPA is not that familiar with homeowner associations, because there's overlap between doing the taxes and reserves, the depreciation schedules, but they're basically two different things. What they're doing for taxes are IRS depreciation schedules that are looking at hard assets and depreciating those for tax purposes, whereas the reserves are not. Reserves are you're building up monies in order to repair or replace capital items. And that means that you're going to want to include into your reserves things like painting the buildings, pruning trees, those kinds of things that are not going to fit into any kind of IRS depreciation schedules. And again, because it's two different things. And if the CPA is confused by this, then the association might want to be looking at a different CPA, someone who's more experienced with how associations work.
Fantastic, and thanks for catching me in my inability to string a few words together in a sentence. Let me take that one step further and talk about components. We, in addition to painting yes or no, we often get some good questions about what's appropriate. And there's two ways to look at it. If you have an association where you have some luxury carpet in the lobby, it's okay, and in fact it's appropriate to reserve for replacement of the luxury carpet in the lobby while you're reserving for only utility or lower grade of carpeting in a back hallway, back stairwell, hallway to the pool, something like that. So make sure you're reserving for appropriate replacements, good things in good places, utility things in utility places, and that should be clearly identified in the reserve study. And then there's technological changes. There may be a buzzer entry system that you upgrade to an entry phone system, or an entry phone system upgrading to a key fob system. Think about what is appropriate for the association. So you're not necessarily always doing like for like. You're doing the appropriate changes or the appropriate replacements for an association. And that also can be applied to materials. We have some clients with a wood fence or a wood deck that is very expensive, very troublesome, and at time for replacement we recommend that they consider something that's going to serve that same purpose but in a less expensive manner, like a synthetic material like Trex that can stand the outdoor weather exposure a whole lot better with almost no maintenance, reducing the net cost to the association.
Let me jump in as well and say I agree with your approach on that. I get it from a slightly different angle, where I'll have a board member or homeowner who's objecting that we're substituting materials or we're doing something that is what would be considered a capital improvement, and that the association cannot use association reserves for capital improvements. Well, if it's, for example, they're repaving the roads, and they need to put in speed bumps because it's a particularly dangerous stretch and they need to slow people down, and they want to put in something to do that, that is something that was not there previously, therefore technically it's a capital improvement. And then they object, saying the board can't do that, and I disagree. If these are costs that are in line, they're not that significant, the board can do this and add something that's not there before for safety purposes. And the other time that I've seen this come up is installation or upgrades of fire control systems that are mandated by the building department. So the association is time now to replace a system, and they're being ordered to upgrade the system, which technically is a capital improvement. Well, this is not something that you would take to a vote of the membership and say, is it okay if we spend the money to do this capital improvement? They're being mandated by a local governmental authority to do that, and it's completely appropriate to be using the reserves for that purpose. So I agree with you in your approach in dealing with reserves.
Fantastic. Well, let's change the question slightly and say, can you change something that exists? We had one question that a person asked, can they repurpose their cracked and unusable shuffleboard court to a picnic area? They have two shuffleboard areas. One is deteriorated, and can they just change that to a picnic area?
Yes, they can. But again, they need to look at, there's some parameters that need to be looked at here. This question comes up with, in fact, one of the associations I work with, they had small satellite pools and that were no longer being used. Could they remove the pool? Okay, and versus can they remove a shuffleboard court? Well, a shuffleboard court is a minimal expense. If it's cracked, it's no longer being used, people just aren't playing shuffleboard anymore, then in my opinion that falls within the board's discretion and they can remove that item. Now, the pool is a bigger capital item, and that would be something that you would take to the membership for a vote. And anything that is significant cost, that you're going to want to take to the members and have them vote on that matter rather than having the board make that decision. And typically that's going to be a majority of quorum is the approval process when you take it out to the membership.
Well, let's twist that question one more time. What about if it's not a question of eliminating the asset? What if you're just not using it? We've had some people ask about not using their pool heater and saving money on utilities and obviously saving money on replacing that pool heater, but just not using it. Can they successfully do that, or is that a problem?
Well, yes, they can. This is, again, within the board's authority because they're in charge of running operations for the homeowners association. And so they're looking at balancing expenses, and when you've got, particularly in this recession, a lot of foreclosures, their budgets are being impacted, boards are looking for ways to save money. Certainly, they can turn off the heater, the pool heater. And the reaction they will get will be depending on how many people are using that pool. So if there's only one person using it, the reaction is going to be small. If you've got 100 people using that pool, they're going to react pretty strongly. And if they're very unhappy, they can remove the board, put in somebody who agrees with them, and turn the heater back on.
The ultimate authority that the homeowners have.
Yes, so there is democracy in that sense that they do have recourse.
Okay, well, let me change the conversation a little bit and go away from components to questions of compliance. What does an association do to comply with their governing documents which require them to have adequate reserves? What are adequate reserves?
Yeah, well, there's kind of 2 points here that are interesting. One is where you've got a set of governing documents, a set of CC&Rs that actually say that the board must maintain adequate reserves. That's actually a higher standard than a lot of the state laws. The state statutes, in fact, in California, they don't even state that you have to maintain anything in your reserves. They just require that you do a study and disclose to the membership what you're going to do and how you plan to fund it. And it might be that you plan to do it entirely by special assessments. Which is a horrible idea, but you're allowed to do that in California. Here, if the governing documents require that you maintain adequate reserves, then essentially that means that there's going to be enough cash to repair or replace items, components in a timely manner. And I suspect you've got some experience with that yourself in the other states that you work with.
Well, it's very difficult, as you suggest, to find out what is adequate, but we can very easily see when an association runs out of money. So we look at that kind of decision with a slightly different taste, and that's, do they have enough cash? And if not, it's special assessment time. What we find is that there's a very predictable relationship. Special assessments define the situation where the association did not have adequate funds. Now, what we find is the frequency of special assessments increases, to no surprise, the weaker the reserve fund gets as you go towards the top of your screen here. So as the percent funded, which you'll see on the column on the left, as that gets lower and lower as it approaches zero, the risk of special assessment running out of money gets larger and larger. So the data among associations across the country, this is from a data set of over 8,000 associations, clearly shows that special assessments are frequent when the association is under 30% funded. So while some special assessments are due to just plain bad luck, I don't think an association can safely claim that they've prepared adequately if their reserves are below 30% funded.
Well, I know I get that question, this question comes up on funding and percent funding, and it comes up in my newsletter and in board meetings. What is percent funded? What does that mean?
That's a good question. We use that all the time in our field of reserve studies here, and so it's very common to us, but of course most people think in a world of cash. Percent funded is a ratio. It's the ratio of the common area deterioration to the actual cash in the reserve fund. When there's more reserve component deterioration than there is cash, they're in a deficit situation. The reserve cash has not kept pace, and that's a situation where the percent funded is less than 100%. An association is 100% funded when they have the same cash as they have deterioration. There's a balance at the association. And on the other hand, when there's more reserve cash than there is reserve deterioration, it's a surplus, percent funded above 100%. So it's always viewed as a ratio or a comparison. To know if you have enough or adequate funds, you have to compare them to the needs of the association at that time.
Were you going to follow up some more on this, on the surplus, on the reserve funding?
Yeah, I should actually. Percent funded is a statement or an evaluation at a certain point in time. Some people get that confused with their reserve contributions. The reserve contributions are going to change their percent funded in future years. So there's a difference between having adequate cash in reserves and making adequate reserve contributions. Adequate reserve contributions are contributions that will sustain their reserve fund in a satisfactory manner. Inadequate reserve funds are inadequate reserve contributions are contributions that will lead to a depletion of the association's reserve fund strength. So the contributions will change the reserve fund strength in future years, whereas percent funded is an evaluation at any point in time. It's typically the first day of the association's fiscal year. Now, I've been talking about the percent funded and then reserve contributions and adequacy. Let me ask you, and turn it back to you, Adrian, with no state or legal requirement to be a certain percent funded, how does a board succeed in their responsibility to adequately care for the financial needs of the association? With no target, how do they measure success?
Yeah, well, I know that there's not, I mean, this issue comes up that we're not required to have any particular amount, percent funding of our reserves. Well, common sense prevails. You're going to be looking at what do you need in order to meet your needs. And so the plans that are done each year and the updating of those plans, the reserve studies, what they do is they allow the board to track what's going on. And so if they know what all of the components are, they know what the useful life is, they know how much it's going to cost to replace them, what it allows them to do is to track from year to year what's happened already and what's coming down the pike at them. And they need to figure out then what they need to do to get ready for replacement of the roofs, repainting of the buildings, because it's coming up in a year or two. And they look at how much money is in the reserve. So they don't need to be ordered by the state to have a particular percent funding level. All they have to do is just use some common sense, look at the reserve study, and then just start preparing for what's coming at them over the coming years.
Let me follow up on that to do what's common sense. What would you say to associations who don't update the reserve study and submit a copy of a prior reserve study or disclosures in the year-end budget package? Is that something that you see common, or is that acceptable?
Well, no, it's not acceptable. It's not a good idea ever to be distributing outdated information to the membership. If you're just taking something, putting a new date on it, and not updating it, and distributing it as if it were an updated document, you're going to have some problems. Certainly in California, where you're required by statute to update it each year, and you don't do it, and every 3 years actually do a physical inspection of the property and look at it and do a major update. If you don't do that and something were to happen and there's a huge special assessment, there's a lawsuit that follows, you can be sure that this is going to come out in court, and it may, if there's a violation of the statute, may be deemed per se negligence, or negligence per se in their failure to abide by what the statute says. But again, common sense prevails here. Don't be distributing bad information to the membership.
Well, let me take that one step further. We've mentioned percent funded, which is reserve fund strength. We've mentioned reserve contribution size. I want to show everyone in attendance today that there's actually 3 results to the reserve study. The reserve fund strength, which tells you where you are at this point in time, the funding plan, which dictates what will happen in the future, how well prepared the association will be in the future, and then there's the component list. It's that third element of the association members being able to see that the board knows what's going on at the association. They can see that a roof project is going to happen in a year or 2. All those kinds of things are the information that changes each year, and the board members need to see that, and the homeowners, from my point of view, deserve to see that on an ongoing basis.
Well, let me ask you a question on dealing with the funding. In fact, you've got your finger on the pulse of what's happening in the other 50 states. Tell me, how many states are you involved in right now that you do studies for?
We're currently doing reserve studies in 43 states, so we have pretty good coverage across the country.
Okay, so you kind of have a sense of what's going on with state legislatures and the FHA. Do you expect that state legislatures, or on the federal level, FHA in particular, that they're going to eventually require 100% funding of reserves?
Well, I certainly hope not. I don't think so. Put those two together, I'm certainly hoping that doesn't become that way. Crafting a reserve component list is still very much part of the art in the description of reserve studies, being the art and science of helping an association prepare for its own future. What appears in the reserve component list and the calculations done to find your percent funded, they're all defined by National Reserve Studies standards. But this still is a business fundamentally based on making assumptions and estimates, which can vary significantly depending on who prepared the reserve study. So while National Reserve Study standards are good, I don't want to get put into a position of finishing a reserve study where the client is 2% funded lower than a national requirement, because in that kind of situation I'm sure I would be getting a lot of pressure to revisit my assumptions.
Yeah, I kind of suspect that there's going to be some move, at least on state levels, where there's going to be some that will be wanting to require some kind of minimal level of funding. I know that there's been a couple of attempts here in California, and there's been a lot of resistance to it from, interestingly enough, not from the legislature itself, but from advocacy groups on behalf of members, of homeowners, who feel like that they're going to be pushed over the edge if there are additional increases in order to fund reserves. And so it's been these advocacy groups that have been arguing heavily against adequate reserves. But you know, once the recession passes, we may see a change in that and another move again to start pushing to have some kind of minimal levels. It'll be interesting to watch and see what happens.
Well, let's follow up on that advocacy question. What about the liability? What liability does a board have if they don't maintain adequate reserves, or if they don't set the contributions even at the 10% level required by the FHA?
Right. Well, it doesn't require any kind of statutory requirements, you know, that they fund at a certain level, because they're going to have a general duty anyway to make sure that there are adequate reserves. And if there are not, then what's going to happen is they're going to be you're going to have homeowners faced with huge special assessments. And I've dealt with associations where they've had assessments, special assessments up to $75,000 per unit being levied against owners.
That'll get your attention.
And seriously, and it also gets you into lawsuits. and boards get sued, associations get sued, and they have to go through the litigation. They're being sued for breach of fiduciary duties, mismanagement, and if there are judgments against the association, even if there aren't, if they go through the litigation process, which is quite stressful in itself, and then you're looking at special assessments to deal with legal fees. I mean, it's just a real mess, and it's just better that they fund their reserves and be contributing something into the reserves and be building them up over time than to do nothing and sit on their hands.
Let me follow up on that, contributing something. What happens if the board says that we just can't afford it? If the board just says we can't afford to do that and they don't maintain the property, how do you address that question?
Okay, well, first of all, they have a duty. The associations, through their elected representatives, which is the board of directors, they have a duty to maintain the common areas. And so can they defer? Well, certainly they have discretion that they can do some limited deferral. They can do some reduction perhaps in reserve contributions. And where I see this is, particularly in California, which has really hit hard in the foreclosure crisis and is continuing to go through this. Some associations were brought to their knees by all of the foreclosures, and their budgets were severely impacted. They had increases in their dues up to where they couldn't bear it anymore, and if they had to continue to increase dues in order to fund reserves, it would drive more people into bankruptcy. So
you don't want to kill.
Yeah, right. You don't want.
Yeah,
exactly. You don't want to kill everybody in the association in order to say that you're 100% funded in your reserves.
Right.
I mean, common sense has to prevail here, and so they're allowed some discretion here in perhaps some minimal deferrals, but they need to get back on track as soon as possible, because they do have an obligation, a duty to maintain the common areas, to prepare for future maintenance, and if they're going to defer, they need to have a really good reason for doing that. Otherwise, they just need to stay on track and keep putting money into reserves and then make the repairs.
Great. Well, Adrian, I'm looking at the time. Let's do one more question here. I had one that I thought was very interesting and insightful from someone who attended our last webinar, and it was they wanted you specifically to address the relationship between master policy insurance and reserves in planning and covering major repairs. Their specific situation was their association was in a hailstorm or high wind area, and they always got their roof replaced with insurance proceeds. So they're asking, do we need to reserve for roof because it always gets replaced by insurance?
Well, they have to reserve for replacing the roof under normal conditions, which is it's going to live out its life at some point. And when that happens, they have to have the money on hand to replace the roof. It's not going to always hail and destroy a roof every year. It's unpredictable as to when and how often that's going to happen, and that's exactly what insurance is for. Insurance is for those kinds of events where it's a sudden loss. You've got a huge windstorm, a tree gets blown down, it damages the roof and takes out windows, and I mean, it's those sudden losses that insurance is for. I can tell you what it's not for, and this was an association I dealt with where I was an expert witness against the association, and that was the board who deferred maintenance for years. The building was in very bad shape. They had no reserves. And what they did was they encouraged one of the homeowners, who happened to be a lawyer, to sue the association so that the insurance would be forced to come in and repair the entire property. And they actually had the bad sense to chronicle all of this in their executive session minutes. Needless to say, the insurance declined. That is not something that they do. They deal with sudden losses and not deferred maintenance. The association lost in its bid and then incurred a lot of legal fees in the process and had to levy huge special assessments. So people just need to understand the proper role of insurance versus reserves, and then make sure that they keep that distinction clear in their minds.
The planned versus the unplanned.
Yes.
Got it. Okay. Well, we're at the end of our speaking of planned presentation. We left a few minutes for questions and answers, but I want to remind you again that don't let your learning stop at the end of today's session. I do recommend going to the davissterling.com website and get back to that. If you select their newsletter tab, you can see right here you can sign up for their free weekly newsletter. That's a great informative way to stay on top of association legal issues on a weekly basis. And then also at reservestudy.com, over here on the right side of your screen, you can see join our email mailing list, and the follow-up questions that I get I often answer in our blog, and you can subscribe to that right underneath that, typing in your email address in here. So there's some great follow-up resources that we have for all the questions we won't be able to get to today. So both of our companies, Association Reserves and Adams Kessler, we enjoy helping our clients with the specific expertise we have, and it's great to be able to use this forum to answer a number of general questions. So obviously, if you need an updated reserve study, we would encourage you to go to reservestudy.com and request a proposal. And I'm sure that if you're a California association in need of some wise legal counsel, please contact Adrian at adamskessler.com. Now, Adrian and I have arranged to stay on the line for a few more minutes to handle some questions. So at this point in time, I'd like to turn the floor over to Chris, who can act as moderator for some of your questions. Chris?
All right, thank you.